this is Sean Hyman from MyWealth.com, and I just want to talk to you today about a concept that I just love, because I realize that a lot of people are new to currencies, and a lot of times they come over from other markets, such as the ever popular U.S. stock market. And so I want to show you that if you have an opinion and have some insight on U.S. stocks, guess what? You have an opinion on a currency pair in the Forex market and probably didn't know it. So let's go ahead and get started.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you today about if you have an opinion on stocks, then you have an opinion on the pound dollar and just didn't know it. And now let me talk to you about what I mean by that. Let's take a look at a 3-year chart here of the pound dollar and the S&P 500. The S&P 500 is in the black line chart, and the red and black candle chart is the picture, the chart of the pound. And you'll see this is a huge tight correlation that when one goes up, generally the other one does too, and when one goes down, the other one does too. And so there's a huge tight correlation. This does not mean tick by tick they do this, or even necessarily every single day by day they do this, but you can look and see that the one has a huge influence on the other. And so the good thing about this is, you know, if you had an opinion on the U.S. stocks, then you've got an opinion on the pound dollar before you really even knew the first fundamental thing about what was going on in the U.K. economy. And I think that's huge because, you know, if you're an American investor and you've invested in U.S. stocks, or even if you're a foreign investor that's invested in U.S. stocks, and you've had a feel for that, and you've had an opinion on that, and you've wanted to come over into the currency market, but you feel that you're green, you don't know much about it and everything, here is one edge that you now have that you didn't know that you had, that will help you in having an opinion and an overall bias on pound dollar. And I think this will help many swing traders that are in trades for, you know, days to weeks. I think it'll help them a whole lot. But let's go on to look at some of these fundamentals to see what this shows us about the pound as well. Now, the pound this week has released manufacturing PMI and services PMI. This is the data that comes out that shows the health of their manufacturing sectors and their services sectors in the UK. And a number above 50 means that you're in what is called the boom time, and a number below 50 is what they call the bust time, meaning that if it's above 50, your economy is expanding and growing. If the number is below 50, your economy is contracting and shrinking. And so you'll notice on the first highlighted number that came out on Monday, previously the data had been at 47.4, which is in green, so it's actually in a revised improvement to the last reading on manufacturing PMI. But notice this the actual number this time that beat the 47.7 forecast for this time, which was 50.8. And so 50.8 is above 50, so that means we're back into expansionary mode in the UK manufacturing sector. That's huge. Okay, but services is an even bigger portion of their economy. They're a mature economy. They're a services-oriented economy, much like the U.S. And so let's take a look at this number 2, which is the one that happened Wednesday at 4:30 a.m. on the chart. Previously, the previous time this had come out, this was at 51.6, so it was already in expansionary mode the last reading that came out, and this reading that came out today, 53.2 is an even better reading than what we had before, and better than expectations. So, you know, the services area is recovering quite nicely. So these are huge fundamental improvements for the UK economy, and thus improvements for the British pound. Now, let's take a look at inflation and what's the inflation picture look like. I really love this year-over-year bar graph because you can see which economies have inflation and which economies have deflation. Deflation, or negative inflation, are where you see the negative numbers, like with the U.S. and Japan have the worst deflation right now, negative 1.4 for the U.S., negative 1.8% for Japan. And New Zealand, the UK, and Australia actually have the highest inflation year-over-year right now. New Zealand 1.9%, UK 1.8%, and then Australia 1.5%. So you've got the UK with the second highest inflation, which from a currency and money perspective, that's good. And even early on, and for stocks, it's good because you need some inflation to grow. I mean, if your economy is expanding and growing, it needs some inflation and we'll have some inflation as a result of that. It's when inflation gets exorbitantly high that it starts to hurt stocks. But even then, sometimes it can still continue to help the currency. So, how is inflation tamed? Inflation is tamed by raising interest rates to keep it in check. And so, when you look out there amongst all the major currencies and go, I wonder who will be likely to start raising interest rates first, you have to believe that it will be some of the ones that already have some of the highest inflation rates going into their recoveries, which are New Zealand, the UK, and Australia. And money loves to be attracted to higher yields, so as inflation grows and as those interest rates have to be hiked, investors earn higher amounts of money on those yields due to those higher interest rates. And so, where is the money likely to flow from into these, New Zealand, UK economy, which is the pound, and also Australia and its dollar? It's likely to come from the places that have had the highest deflation, places like the United States and Japan. So coupling all this together, when we're looking at our pound-dollar situation, it's a negative for the dollar and it's a plus for the British pound. So again, that's another good sign when we look at the fundamentals for the pound-dollar. Now let's see if the technicals confirm these fundamentals, and you'll find that usually is the case. That people think that they have to be either a fundamental person or a technical person, and they can't be both. They have to be one or the other. But it's actually these fundamental forces that actually form the technical trends, and so it's no surprise that we see on this technical chart that the pound dollar is in an uptrend. Yes, it had a sideways consolidation within its larger uptrend, which is really just a breather, taking a breather and consolidation from its huge run up before. And we can see this overall uptrend as shown by the 50 period or 50-day simple moving average on pound dollar's daily chart. And that's that black line that you see moving up there. And you see the green arrow. I just emphasize the uptrending move. And the break of the sideways resistance with the red resistance line being broken, and the blue boxed area shows the broken out area above resistance, and where I feel that the pair will head as a result of the recent breakout technically and the fundamentals as well. And I've seen so many traders trying to pick the top on this sideways range and short it, so that's I believe even going to fuel the fire further for those that are long or buyers of this pair, because they're on the wrong side of the market. They're finally going to realize they're on the wrong side of the market and either get stopped out or have to close out their positions, which is really just going to add more buying pressure and more fuel to the fire for this pound dollar buy. Now, with that said, that is my analysis of fundamentals and technicals. That is my personal opinion. What you need to do is make sure and do your own analysis. See if your analysis confirms with this. If it does, then great, you can place the trade. If it does not, pass on that trade. I'd also like to call your attention to the bottom of the written blog, where you can find out, I've got links that you can just click on to find out how to learn more about currencies in the currency market by getting in one of our courses. Also links for demo accounts and a real live Forex account if you're ready to place trades off of this idea or other ideas. And then if you'd also like to catch more YouTube videos on us or follow us on Twitter, I've provided links there as well. But whatever you do, I'd encourage you to contact us to get in a course and check us out. I've provided the exact link above on this slide, but you can also reach us if you have more questions at 1-866-255-9677. It's 1-866-255-9677. You can click on the chat button, which I have circled there as well, or simply if you have no further questions, you can enroll in the course now by clicking on Enroll Now. You can also find out more about it by clicking on the video that I show there. Whatever you do, don't wait. Get in a course and get educated today so that you can start your trading career. www.mywealth.com. Thanks so much for attending.
Thanks so much for watching today. I want to just direct your attention to the bottom of the written blog, where you can find out about how to get a hold of us, how to find out more about us, and how to get involved with this pound dollar play. Thanks so much for watching and attending today. See you next time. Goodbye.